Now, Nigeria's Debt Management Office will offer about 157 billion naira worth of treasury bills across 3 tenures today. Akpevwe Oputu, fixed income dealer at Axis Bank, joins me for a midweek analysis of Nigeria's fixed income and FX markets. Akpevwe, thank you for joining us today. Let's start with the offer today of the treasury bills auction, 3 tenors. Talk to us about possible subscription levels and the rates that we could see today.
Okay, thank you for having us on the show. So for today, the DMO is currently auctioning about 157 billion across the 91, the 182, and the 364-day bill. So from the figures we're getting in the market, we expect that the stop rates will actually come down lower from where we saw it close on the 1 year from 7.35%. We expect that the auction will be oversubscribed. There's a total of 127 billion on offer on the long end of the curve, which is the most attractive and where investors are currently playing at. So in the secondary market, we see these bills trading around 6.6% levels and 6.6 to 6.8% levels. So we expect that if this oversubscription comes into the market and the DMO doesn't sell up to what is an offer, we expect that the rates will actually come down at the auction, and this will filter into the secondary market, forcing the rates to come out much lower.
It's quite interesting, this trend where we're seeing demand stripping supply, and of course that puts the DMO at an advantage, bringing rates lower at each auction. But I mean, to what extent do you think this can continue? Do you think that it will get to a point where investors may demand more to hold on to this Nigerian debt instrument, or do you think that the DMO still has all the cards, and as long as demand outweighs supply, the rates will continue to go lower?
So there's very few investment options out there for investors to play in, which are as secured as the NTB. Currently, we've not seen an OMO auction in the last 4 weeks. And so we've seen a lot of the maturities that have come into the system, even from the hands of other investors, filter into the NTB space. And once the subscription at the NTB space outweighs the amount that is being offered, automatically the rates would trend downwards, because you see a lot of people throwing their bids at low rates in a bid to win, and the DMO is comfortable selling at these levels because it's actually a win-win when you get to bid for a 1-year instrument for as low as 6.5%. So I think the DMO has all the cards in the market. If you don't win at the auction and you try to purchase this security at the secondary market, you actually get much more lower offers than the NTB auction. So I think they're actually controlling the market, and from the trend we've seen from where they started at 9.75% and started coming down at every auction, they actually are controlling the market right now.